Hello and welcome. In this video, we will learn what delta is and how it affects the price of an option. Okay? In the previous video, we had learnt about this. I had told you that we need to learn about this to know how and how much do these factors affect the price of an option. Okay, to know that we need to learn something called as option Greeks. Okay, there are many option Greeks, out of which main are these five: delta, gamma, vega, theta and rho, and we need to learn these. Okay, now remember that it is not required to know what these are for you to start trading. But then knowing these will help you make better choice while trading. Okay. Now let us start with first Greek, which is delta. Basically, delta is a value, and this value tells us how much does the premium change when the spot price changes by 1 unit. Okay. Now, when I say spot price, it is not only for stock. If you are trading in an index, for example, Nifty or Bank Nifty, then the spot price of Nifty and Bank Nifty. Okay. So, when I say spot price, it means spot price of the underlying asset, whatever that is you are trading. It may be either stock or index. Okay. Now, I am going to take an example and explain you the concept of delta. Alright. So do watch the entire video once. If it is not clear, watch again, and I am pretty sure that the concept will be clear to you. Okay. Now I will take the example of Canara Bank stock. Canara Bank. The spot price as of now, alright, at the time of making this video is 307.9, and the lot size of Canara Bank option is 2700. Okay. Now I have the details of option Greeks of Canara Bank. Now where did I get this from? There is a website which I will introduce to you at the end of this video. Okay. For now, do not worry about it. So here you can see gamma, vega, theta, delta, IV, LTP values for call option, and all the same values for put option on the right side. At the center we have strike prices. Okay. So current market price, current spot price is 307. So at the money is 310. Okay. And you can see that the strike price is in the step of 5. So 310, 35, 300, 295, 290, 285, so on. Here 15, 20, 25, 30, 35 and so on. Okay. So it is in the step of 5. 310 is at the money. Now for call option, all the values below 310 are in the money, and all the values above 310 are out of the money. You know that by now, correct? For put option, all the values above 310 are in the money, and those below 310 are out of the money. Okay. And in this video we are learning about delta, correct? Delta. So you can see for strike price of 310, I have delta value 50.85. Now why do we need to learn about delta? You see, when you start trading, the main question that comes to your mind or main decision that you need to make is to select the strike price, correct? So how do you select the strike price? Whether you have to buy 310 CE or call option or 310 put option. whether you need to buy 300 call option or 300 put option, whether you need to buy 335 call option or 335 put option. How do you decide that? Well, delta value will help you to make that decision. Okay, as you become a trader, as you go through the journey, it will come naturally to you, but in the beginning this would be helpful while selecting the strike price. Okay, now let me proceed further. I will take 3 strike prices from this and I will calculate few values and explain the importance of delta. Okay, so I will take 3 strike prices. One is at the money 310, one is out of the money 345, one is in the money 375. Okay, I have copied down their LTP and delta values too. So if you pause the screen and if you can note down, you can calculate it along with me. Okay, now some websites give the delta value in the range of 1 to 10, as I have given in the bracket. Okay, in the brackets. Some websites like what you are seeing here give it in terms of percentages. Okay, percentages like what you see here outside the bracket. Okay, now I will explain you what delta is in simple terms and I will go ahead with the calculation. This what you see here, I will explain about this first and then about this. What is the change in the premium value when the spot price increases by 1 unit or 1 rupee? Okay, see, we pay the premium, correct, while buying options, we pay the premium. How much does the premium increase when the spot price increases by 1 rupee? That is what delta tells us. Okay, so now if you see here 0.50, now what does this mean? This means that when the spot price increases by 1 rupee and when it goes to 308.9 rupees, the price of the premium, which is this, increases by 50 paise. Okay, 50 paise, that is what it says. Alright, so this will increase from 9.25 to 9.75. Alright, 9.7585. That is what it says us. It tells us. Okay. Now, if you think about this, value, then how much does the premium increase when the spot price increases by 100 rupees? Okay, you can think of it like that. Meaning, now it is 307.9. If it goes to 407.9, then this premium will increase to 9.25 plus 50.85. This strike price premium will increase from 1.1 to 1.1 plus 9.67. This strike price premium will increase from 35.1 to 35.1 plus this much money. That is what it means in simple terms. But let me go ahead with calculation and explain you the concept. Okay, bear with me. So I buy, first case, I buy one lot of option of 310 strike price. Okay, and I am buying call option in this case. Alright, so how much do I need to pay? I need to pay 9.25 into lot size. So this much money. So if I am option buyer, I need to pay this much to the seller to buy one lot of Canara Bank option stock. Okay. Now, at the time of buying, this is the price. When I am buying this, when I bought this was the price today. Okay. Now tomorrow, let us say the spot price of the stock increases to 309.9, 309.9 rupees. Okay. So change in stock price is 2 rupees. 309.9 minus 307.9. Increase in stock price is 2 rupees. Okay, 2 rupees. Now, how do we earn money? How do we make profit in option? We make profit or we lose money when this price moves up or down, correct? I bought at 9.25 rupees. When this moves up, I make a profit, correct? So I am worried about this. I am concerned about premium. Now, delta value tells me how much does the premium move. What we get from the table is how much does the premium move when the stock price increases by 1 rupee. But here in this case, it has moved by 2 rupees. So 2 into this value divided by 100. Why did I do this? I am converting this into decimal, that's all. Okay. So this is for 100 points. I want for 1 point or 1 rupee. That is why I am dividing it by 100. Now if this math is confusing to you, you can directly multiply 2 into this value. This value is nothing but this value. Okay. When you simplify this, you get this value. How did I get this value? If this is also confusing to you, just put the dot to the left. That's all. Start with the dot. 0 point, then whatever the value you have, that's all. Okay. So this will not be 0.9, this will be 0.09. Okay, 0.09. That's all. So 2 into this much, which is 1.017. So the delta value is 1.017. So change in premium would be 9.25 plus the delta value. So 10.267. What is the meaning of this? What is the meaning of this? I had bought one lot of Canara Bank option when the price was at 307.9. Okay, by paying 9.25 rupees. The price has increased to 309.9. It has gone in my direction. I had bought call option. It has increased. It has gone in my direction. So it has gone up by 2 rupees. If it has gone up by 2 rupees and delta value is 1.017, the change in premium would be this much, meaning this price will increase to this much. So if I sell now, if I sell the lot today, which I had bought yesterday, I will get 2,700 into 10.267 rupees, which is this much. I had bought by paying this much. If I sell today, I will get this much, and the profit would be this one minus this one, which is 2745.9 rupees. Okay. So this is how the delta value will be useful. Now, this is the profit if I buy 310 strike price at the money strike price, at the money option. Okay. Now, what if I select a different option? Let me now consider 275 CE. let me consider this. Okay, let me consider this strike price. So instead of buying this strike price, I buy this strike price. To buy this strike price, I need to pay 35.1 into 2700, which is 94,770 rupees. Okay, so I need to pay 94,770 rupees to buy one lot of Canara Bank option. Now, tomorrow, if the spot price increases to 309.9 rupees, the increase in stock price is 2 rupees. 2 rupees. Okay. Now, delta value here is 94.93. Okay, 94.93. So, 94.93 divided by 100 into 2. Why into 2? Because the price has increased by 2 rupees. So, into 2. So, 2 into this much will give you this much, 1.8986. So, this is delta value. So, the change in premium would be 35.1, the one at which I had bought, 35.1 plus the delta value, this much, which is 36.9986. Okay. So if I sell today, then I will get this much money in my account. Okay, this much money in my account. So profit would be this one minus this one. This is how much I get back today after selling. This is how much I had paid. So the profit would be 5126.25 rupees. See the difference here? See the difference? Instead of buying 310, if I had paid bit extra and bought this strike price, then I would have got this much profit. Okay, this much profit. Every other condition is same. The spot price is same. The change in spot price, stock price, everything is same. Only the difference is selection of strike price. So see how selecting this earned me this much profit. Now let us go to third condition. Instead of buying ATM or ITM option, I buy OTM option. So spot price at the time of buying is same. Instead of buying these options, I buy 345 call option. Now the premium is 1.1 rupees and I pay 2,970 rupees. Okay. Tomorrow it increases to 309.9 rupees and the change in stock price is 2 rupees. Here the delta value is 9.67. So 9.67 divided by 100 into 2 is this much. So the change in premium is 1.1 plus 0.19. So this much is the new premium. Okay. If I sell, I will get this much back. So the total profit would be this much minus this much, which is this much. Okay. See the difference? If I buy this strike price thinking that it is available at a lower price or it is available at a cheap price, then the profit that I am going to make is also same, very less. Whereas if I pay much more than this, or if I can put it in other words, if I am ready to pay more for this strike price, my profit will also be more. Okay. So this is how you can make a decision on strike price, what strike price to select. Okay, what strike price to select. Now this is for call options. The calculations that I have shown you is for call options. For put options, this is opposite. Okay, for put options, this is opposite. Let me explain you using the same graph or image. For call option, the delta values will be positive, whereas for put option, delta values will be negative. Okay, so you can see minus and values here. Now let me consider the example of call option itself. Call option itself. All right. So let us say that I buy. Let us say that I buy 310 call option. Okay, strike price of this. Now this tells me how much the premium will change if the stock price or spot price of stock increases by 1 rupees. Alright, that is what we have seen till now. And it also says how much am I going to lose if the spot price or stock price reduces by 1 rupees. Okay, which is this much. Basically here, coming back to this, if according to what we have calculated, if the stock or the spot price decreases by 2 rupees, then I will lose this much. This will be my loss if I buy this strike price. Okay, if I buy this strike price, then if 2 rupees goes down, or if the stock price goes down by 2 rupees, this is my loss. If I buy this stock price, if I buy this strike price, and if the stock price goes down by 2 rupees, then this is my loss. And you can see that the loss is greatest in this or for this strike price, and the loss is lowest for this strike price. Okay, so you get the idea now. Here for this strike price, if the price of the stock goes according to your direction, the profit will be highest. If it doesn't go according to your direction, then the loss will be highest. Whereas here you have minimum loss, minimum profit. Whereas here medium profit, medium loss. All right. Yes. So that is for call option. Now coming to put option. What this says is how much money, okay, how much money will increase in premium if the stock price goes up by 1 rupees. Okay. Now when do we put option? When we believe the price will go down, correct? So if the price of the stock goes up by 1 rupee, then you will lose this much in put option. Okay. So same as this, almost similar, 50.85, 49.24. Okay. Or in other words, if the stock price goes up by 100 rupees, if the stock price goes up by 100 rupees, I will lose this much rupees in premium. Okay, this much rupees, 50 rupees. You can think in other way too. If the stock price goes down by 1 rupee, then I will earn this much in put option. Okay, earn this much means premium goes up by this much in put option. Okay, now the delta values of put options are negative because these are given considering the unit increase in the underlying assets price. Meaning how much will delta increase if there is a unit increase in underlying assets price? If it moves from 310 to 311, how much will delta change? So put option values decreases, correct? Put option value decreases if the price of the underlying increases, correct? That is why they are given in negative values. All right, I hope it is clear. So here they are positive because if the value of underlying increases, the call option value increases. So they are in positive. Okay. So I hope it is clear. So exactly opposite of this calculation is for puts. Alright, for puts. Now, if you notice, the delta value is least here, deep out of the money. This is out of the money, okay, for call option. So if you think you will earn some profit or money by buying out of the money option, then you will be wrong. Okay, if you think that it is available at a very cheap price, 0.35 rupees here, then you have to consider this also. So 3.19 or 0.03. Alright, so this will not move at all. Whereas here, if you take 94.93, if you buy this strike price by paying this much, then you will earn or you will make profit when the price goes up. Okay, but then you must also remember that if the price doesn't go according to what you want, you will also lose a lot. Alright, so the at the money strike price option will have 50 delta value, and let me proceed. At the money option will have delta 50, in the money option will have delta 0.5 to 1 or 50 to 100, out of the money option will have delta 0 to 50 or 0 to 0.5. Okay, and delta value for call option will be from 0 to 1 or 0 to 100, varies according to websites. Delta values for put option varies from 0 to -1 or 0 to -100. Alright, I hope it is clear. And you must remember this, as the stock price and the premium keep changing, the delta value also keeps changing. Okay, so if you see here, this was a screenshot, or this is a screenshot. The price of the stock keeps on fluctuating, correct? As the price of the stock keeps on fluctuating, as the premium keeps on fluctuating, the delta value also keeps on fluctuating. Basically, everything keeps on fluctuating. Okay, keeps on varying when the market is open. Alright, this was at the time when I had taken screenshot. Alright, so I hope this is clear. I hope this concept is clear. Now let me go to my desktop and show you in which website I got this screenshot and how you can get it too. Okay, alright, so go to google.com and search Opstra, OPSTRA. Okay, and go to the first result by DefineEdge, opstra.defineedge.com. Okay, so click on it and you have an option to sign up. Alright, you need to sign up before you can use that. So click on login or sign up and sign up. Okay, don't have an account, register. If you have, you can log in. If you don't have, register. And after registering, come back to this website and log in using the details. Okay, so I will log in now. Alright, so I have logged in. Now once you log in, go to open interest and go to option chain. Okay, option chain. And here I showed you the option chain of Canara Bank. So let me go here, Canara Bank. Okay, and you have to select the expiry, so 29 June expiry, and here you can see the values or option chain, but what we want is option Greeks. So click on option Greeks and you can see all the gamma, vega, theta, delta values of the options, okay, along with the strike price. Alright, so go ahead and make an account because this will be useful for your analysis while trading. Alright, so that's it for this video. I'll see you in the next video. Till then, take care and thank you for watching.